Hello and welcome to Asking for a Trend. It has been a busy afternoon. Stocks pulled back amid renewed fears over AI valuations. The NASDAQ, the worst performer on the day, down nearly 2%. The risk-off sentiment rippling into the crypto space too, with Bitcoin sliding again today, breaking below that $100,000 level. And after the bell, we've been watching a slew of earnings, including from AMD, Cava, Rivian, and more. AMD reporting a beat on earnings and revenue for the third quarter. Its data center segment revenue seeing a 22% increase year over year. Here for a closer look now at the quarter, got Benchmark Company Managing Director and Senior Semiconductor Research Analyst Cody Acree. Cody, it's good to see you. So AMD reports the stock is slipping here about 2.5%, at least initially in the after hours. Of course, Cody, the stock had just a remarkable move heading into the print. But I'm curious, Cody, just get your first take on these results.
I think, Josh, they're really strong numbers across the board. $500 million upside in revenue, decent EPS beat, $400 million guide. And it's really, it's largely on the strength of their gaming and client business. Gaming was up 181% annually. That's on the refresh of the Sony and Microsoft game systems. Clients up only 50% annually, but servers are up another 22%. So they're continuing to take share from Intel in the server market, but overall, I thought it was a strong number.
Cody, I mentioned the move the stock had into the print. It was up around, Cody, 50% over the past month. And you could chalk that up, I think, to AMD making these really headline-making deals, right, with big names, with OpenAI and with Oracle. And I'm just curious, Cody, when you were talking to your clients about those deals, how are you walking them through it? What it means for AMD long-term, financially and strategically?
Long term, I think it's extremely positive. You've got Oracle, you've got OpenAI that's now coming to the table there. The big concern had been whether or not AMD could become a real alternative to Nvidia's AI accelerators. And I think with these new agreements with Oracle and OpenAI, you're starting to see the market's answer to that. And I think that with the new rollout of their new systems, their new MI400 platform, their new Helios rack scale system. This all comes out in 26, and this is AMD's real answer to NVIDIA's NVL platform that leads the market today. And so this will be the first opportunity we really get to see AMD compete head-to-head with NVIDIA, but the market's already answering that with customers already starting to line up.
One question, Cody, I have is about, and listen, it's a question for AMD, but also NVIDIA and others, is this company's China AI business, what that looks like ahead. Cody, is there even going to be a business?
Well, Josh, the China business was excluded from this quarter and from its guidance, as Nvidia is doing as well. So prudently, given the uncertainties with the China market, that's being taken off the table for now. I think it's superfluous at this point. I think it's incremental. If it comes, it's not needed, if not necessary. If Trump and China cannot come to terms, then but it is upside if it does happen. I think in the end we'll get some sales of AI accelerators into China. The demand is just too large, and our leadership is too large, so that the demand for these service providers in China is going to be there with their AI aspirations. But in what form and what timing that's going to be, it's still on the table, and so we'll just have to see how that shakes out.
I wonder, Cody, and feel free to correct me if maybe this is too simple, but I wonder if some investors think, you know what, I just heard from big tech. They all just report results. And there's no sign here that they're slowing their AI investment. Not Meta, not Microsoft or Amazon or Alphabet. If that's true, Cody, then do I just stick with Nvidia? Do I just stick with AMD? Or would you say, no, that's too simplistic?
I think it's too simplistic to stick just with Nvidia because there are a lot of other alternatives, and AMD being the largest among them. And so I do think that there are reasons to be involved here with AMD. I think they're, like I said, the primary alternative, and they are going to get the benefit of that incremental growth as it's new upside business. Now they've lived and they've benefited from their leadership against Intel, years of taking share, years of work that they've done to gain that leadership. But now the incremental upside is going to be gains against Nvidia, and I think that's yet to come.
Finally, Cody, you look at AMD and you just look at this chart. There are questions naturally going to be about valuation. You still believe valuation attractive here for Lisa Su's company?
I do. I think the more that they can demonstrate they're a good alternative to Nvidia in AI, and as long as we have the AI tailwinds, as long as CapEx budgets continue to grow, as long as spending and usage is continuing to find attractive homes, then I think that demand for AMD solutions is going to be there. It drives not only a solid growth in their AI accelerator business, but also their core central processing business for data centers. You need these to run the back office applications, to run the head office and the orchestration of all of this data center management that has to happen. And so you can't just build out an AI data center. It has to run on these CPUs and increasingly their AMD CPUs.
Cody, appreciate that instant analysis, sir. Thank you.
Thanks, Josh.
Well, for more important conversations around AI as well as crypto and the economy, tune into Yahoo Finance's Invest event on November 13th. We got a slew of other heavy hitters on the docket, so save that date. It's an event you can't afford to miss. We've got an earnings alert. Shares of Pinterest sliding here on its holiday quarter outlook. The company expects fourth quarter revenue between $1.31 billion and $1.34 billion, and the midpoint of that range is below the consensus estimate. For the third quarter, results missed estimates on the bottom line, and revenue came in line with analyst expectations. Pinterest reported 600 million monthly active users in the third quarter, which topped estimates, but in the most lucrative market, the U.S. and Canada, the social media platform added only 1 million users from the prior quarter. Concern there is that the user base in the US and Canada accounts for roughly 75% of all revenue. Well, turning to Cava, that company reporting its third quarter results, and Yahoo Finance's Brooke DePalma joins us now with a look at those numbers. Brooke.
What we're seeing here is a bit of a slight sell-off here. Shares down more than 4%, falling as much as 5%, adding to a nearly 50% decline that this Cava stock has seen year to date. Taking a deeper dive into the numbers, what we saw was a slight beat when it came to revenue, coming in at $292.2 million compared to what Wall Street expected of roughly $291.5 million. A slight miss, though, on adjusted earnings per share, coming in at 12 cents versus the 13 cents that Wall Street had expected. But a key number here that we're really looking for is that same-store sales growth. What we saw there is it only grew about 1.9% during the quarter, and Wall Street had projected same-store sales to grow about 2.7% during the third quarter. Now, higher menu prices and product mix. Keep in mind, Cava introduced chicken shawarma during the quarter, as well as the reintroduction of steak. They already had it on the menu. It's been doing well for them. That sort of offset flat guest traffic that the company saw during the quarter. And in the release, CEO Brett Schulman said that they delivered another quarter of market share growth, really holding up to that value proposition. But he did say that it was evident that it also lapsed a strong prior year results and macroeconomic headwinds within the quarter. And that's what ultimately caused the company to cut their fiscal year outlook when it came to same-store sales growth for 2025. The company is now expecting growth for same-store sales between 3% to 4%, and that's a significant slowdown than the 4 to 6% that the company had previously projected. And so lots of different factors moving into this, but more of the story is that this fast casual really surge that we saw in 2024 doesn't have much of legs throughout 2025, and we're seeing that continue into the end of the year.
All right, Brooke, thank you. And be sure to tune in tomorrow to Yahoo Finance's Market Catalyst, where we'll speak with Cava CEO Brett Schulman. You won't want to miss it. Well, turning to more earnings, EV maker Rivian is out with its third quarter numbers. Let's get to Yahoo Finance's autos reporter, Praz Sumeranian, with the latest. Praz.
Yeah, stock up. Your Rivian reported results that beat estimates as it navigates the loss of the federal EV tax credit and builds towards the future with its R2. So for the quarter, Rivian reported revenue of $1.56 billion versus $1.49 billion, up 78% compared to a year ago as a pull forward in deliveries boosted sales. So Rivian posted a loss per share of 65 cents versus 71 expected. Adjusted EBITDA coming in at $602 million, a loss there, but posted a gross profit of $24 million, snapping last quarter's loss after 2 straight quarters of gross profits for the automaker before that. Now, the company also maintained its full-year loss projection as trade wars, loss of the EV tax credit remain complicating factors. They reiterated its adjusted 2025 full-year EBITDA loss in a range of $2 to $2.25 billion, with capex of $1.8 to $1.9 billion. As for the R2, Rivian says the mid-size SUV is still slated for release in the first half of 2026, with a body shop and paint shop, among others, ready for the next steps of production. Josh, might be your next new car.
I think you're onto something right there. Why not add one more, right?
Yes.
Thank you, Praz. Stick around. Much more As for a Trend still to come. Well, professional services firm Cognizant is partnering with Anthropic to use Claude as the preferred AI model for businesses. And Yahoo Finance's Morning Brief Market Sunrise host Ramzan Karmali spoke to Cognizant CEO Ravi Kumar about that deal.
So here is what system integrators like us do. Over the last 30 years, we built services around the software development cycles. And we wrote software code and we shipped it to enterprise landscapes. We did that on-premise for many years. Then we did it on the cloud, and I call it the elastic computing era. So this was all about what we did. Here we are in the era of AI, where we're starting to build services around the LLMs. I call it the contextual computing era, where the technology is not just an insights tool and a decision support tool. It's also a tool which can actually create digital labor. So the cloud models of Anthropic actually are one of the best in the world. They're trustworthy, safe, as well as they deliver responsibly to businesses. So in the contextual computing era, as I call it, bringing the power of intelligence from the cloud models of Anthropic and the domain expertise of companies like Cognizant, so that we can apply this to businesses. So here are the two swim lanes on which this partnership is going to pillar on. First is writing software code. I mean, the single largest use case for AI is actually writing software code and assisting humans. We are the only company in our peer group which actually has audited numbers of what percentage of our code is written by machines. 30% of our code is written by machines. This is what I said in my earnings last week. And on this swim lane, we think we can actually deliver more software for less. And the paradox of doing more for less is, technology is so elastic that you're actually going to consume more. So we believe that throughput, that higher throughput, higher velocity, and lower cost of deployment is going to increase the amount of software we can actually write for clients. The second swim lane is about applying LLMs to enterprise businesses and business operations and creating digital labor, as I call it, or agentic capital, which is going to coexist with human capital, and actually it'll amplify the human potential. And we can reinvent and reimagine business process functions, business process workflows, and business landscapes. And as we go through that reinvention, we are going to see more productivity, new products, new services, which are going to be delivered, which are powered by AI.
But Ravi, you talk there about, a lot of your code is now written by AI. Do your clients, you've got some huge clients across the pharma world, do they actually know, can they recognize this? Are they able to decipher
100%.
whether something is written by AI or something is written by a human? And does that impact on how much you can charge them for the service that you're providing?
So Ramzan, the way it works is when the code is written by machines, it's not production grade. You need human in the loop to complete the process. We have platforms which integrate the human effort and the machine effort, and it is delivered to our clients. So, the point is, it is not about just delivering code from a machine. It's also about integrating human effort and taking it. We do 30% of our code and our software development cycles are impacted by, are impacted by machines. We integrate it with the human effort and then we deliver to clients.
Now, Ravi, you say it feels like you're setting yourself up now really as an AI company, but you are a professional services firm at the end of the day. So what makes you stand out from other professional services companies that offer similar type of services and products?
Ramzan, I actually mentioned in my earnings last week that we are an AI builder company. We have transitioned to an AI builder company. The AI builder company is one which is actually reinventing and reimagining business process with the power of technology. The reason why I call ourselves an AI builder company is, remember, there is billions of dollars, 400 to 500 billion dollars of AI infrastructure which has got established. And that value has to drift to the front to enterprises which can actually leverage it. And that's where the value is. So we actually navigate the journey for our clients. And as an AI builder company, we just don't have capabilities which are AI related. We actually layer capabilities with platforms which build the last mile infrastructure, which is actually needed for our clients to embrace AI. Though that last mile infrastructure kind of leverages the contextual computing era. Remember, this is a technology which actions, which means you need to weave the context into the LLMs or the frontier models. So we weave the workflows, we weave the data flows, we weave the execution patterns, and we weave the tribal knowledge into this LLM so that the agentic capital, which is built on the other side, is actually very contextual to the business you are in, to the culture you have, and to the workflows you have. And digital labor, in many ways, is much more than what classical software did. Classical software penetrated into businesses only to a small extent. The surface area on which AI is going to operate is much, much more.
And Ravi, what do you say to the naysayers who say that AI spending may have gone too far, that these tie-ups that we're seeing are, just a bit of smoke and mirrors, that there isn't really anything concrete behind this?
There is a difference between the bubbles and industrial bubbles. This is an industrial bubble. An industrial bubble is good because the technology will endure. And the players who are in the mix may or may not be successful, but the technology will endure. Now, look at what's being invested. Roughly 400 to 500 billion dollars is invested on the back end of the AI infrastructure. If you see the operating cash flow of the 7 big companies which are investing into this, their operating cash flow is much higher. So the leverage, if you're looking for leverage for the risk of the bubble, they're not leveraged. It is predominantly from the operating cash, the funding of this infrastructure is. The reality is a lot of the implementation of AI is consumer-led AI. The moment you drift that value to business AI, and the bridge to business AI is companies like ours, we are going to see a reinvention of businesses. And when reinvention of businesses happen, the productivity bump you're going to get is going to actually justify the extraordinary investments which have happened on the back end of infrastructure. Any technology disruption, you're going to see the infrastructure being invested first, then the services around it are going to be built.
That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet.